Hi, we're going to talk about a sell and purchase agreement today. I'm Max, I'm from Platinum Legal, and we're going to cover off some of the things that I would look for as a lawyer in a sell and purchase agreement. So before we start, obviously this isn't legal advice. Before you sign any agreement at all, you should absolutely talk to your lawyer. What we're looking at here is the ADLS agreement, or the Auckland District Law Society agreement. This particular version is the 11th edition 2022, bracket 3. This is one of the things that we'll look for. What's the address of the property? What type of title of the property that you're actually intending to buy or sell? This is the price that's been negotiated and agreed. And we're going to be talking specifically about these three things: the deposit, the settlement date, and the conditions. The deposit is a deposit that you pay to the seller, not to the bank. Typically, deposit amounts can be 5% or 10%. And it's either paid when the agreement's signed or when the agreement goes unconditional. If you're a buyer, it's generally always better to actually pay the deposit only when you go unconditional. A short note about this is if you are relying on KiwiSaver to pay the deposit, then absolutely let your lawyer know in advance as soon as you sign the agreement. It takes quite a long time to actually make that application and have the KiwiSaver provider withdraw your KiwiSaver balance. It's very, very important that the deposit is paid when the deposit is paid when it's due, and if there's any delays because KiwiSaver is not withdrawn on time, the seller can actually cancel the agreement, and that's something you don't want to happen. Settlement date is generally the date when you are taking over the property, when you pay the rest of the money to the seller, and the seller gives you the keys to be able to either move in or you can start renting it out. There are lots of bad things that can happen if you don't meet a settlement date. It's very, very important that you keep on top of any requirements that your lawyer gives you and any appointments or any advice that your mortgage broker gives you well in advance of the settlement date to avoid the very, very bad consequences that can happen if you don't meet the settlement date. Let's talk about the conditions. The three main conditions is the finance condition, LIM report condition, and the building inspection report condition that's outlined over here. There are several things to know about conditions. The first thing is conditions are exit points that if, for example, you're not happy with any of the conditions and it falls within the condition dates, then you are able to get out of the agreement without any consequences. The first condition that we'll cover is actually finance condition. Finance condition happens if you are applying for a loan and you're not being approved for the loan, then you can get out of the agreement because your finance is not being approved. It's very, very important that you would only cancel the agreement if your finance is actually not approved. If you haven't taken any steps towards applying for finance, then you should not be using this condition to cancel the agreement. The problem with finance conditions now is that if you are relying on a finance condition to cancel the agreement, the seller can actually ask for proof of your finance application. If you don't provide that, then you could get in trouble. The LIM report condition. LIM report is basically a council's executive summary for their records on the property. It will tell you things about the history of the different consents that apply to the property, if there are any identified issues in the property. It will also identify the different designations that the council has over the property. Some of the things that we would look out for in a LIM report are things like the record of the different consents. If the last recorded consent on the property is, let's say, 1993, and there's a building extension that looks like it was built in the last 2 or 3 years, then that could be an indication that there may be unconsented works on the property. We'll also look at the different designations that are in the property, including if, for example, the property is flood prone or in a coastal erosion zone. The third condition that we would look out for is the building inspection report condition. The building inspection report applies if you are hiring a suitably qualified and experienced building inspector, and they produce a report, and the results of the report are the results that you're not happy with. In that situation, you can actually cancel the agreement. Now, depending on whether the standard template condition is actually used or if the agent modifies it into something else, you can, if it's just a template in the Auckland District Law Society agreement, you have very, very broad discretion to actually cancel the agreement if you are unhappy with the report, provided you actually hire a suitably qualified and experienced building inspector. Some agents modify this condition so that if, for example, the building inspection report shows any areas which are not good, that you would give the vendor an opportunity to fix them before you're able to cancel the agreement. If there are any such modifications, your lawyer should be advising you before you sign the agreement. There is actually one more situation there that's not covered by the usual conditions, but it's something that we strongly advise you look into before you go unconditional on the agreement, and that's insurance. You shouldn't assume that the property that you're buying is going to be insurable. Before you go unconditional, you should absolutely talk to several insurance companies and ask them whether the property that you're intending to buy is insurable. If, for example, your property is in an earthquake zone, flood prone, or in a coastal erosion zone, or if it has a variety of different other issues, your insurance company may not want to insure the property. If they don't want to insure, then your bank is not going to want to give you the money, even if they've given you an approval. So it's very, very important that before you go unconditional, that you actually double check with an insurance company to make sure that you have confidence that the property is insurable. So that's basically it. Hope that's helpful.